It's Market Day Report. Well, welcome to a Thursday. We're, 25 hours, 15 minutes, something like that away from a USDA report. World Ag Supply Demand Estimates, or WASDE report, set to roll out 11 o'clock Central Time tomorrow. So we'll dig into that a little deeper in just a moment. First off, let's start with the corn market. Where are we trading here at mid-morning? Lower. December, 419 and a quarter. It's down a penny 3/4. Deferreds are in the red. Soybeans have been lower all session, down 5.5 on the lead month, 1014 3/4. And the wheat market has been trying to buck the trend and continues to do that with the Chicago contract. New crop, July, 643 1/4. That's a penny 3/4 higher. And for hard red, July, 4 cents higher, 645 3/4. And Minneapolis, penny 3/4 higher on the D's at 650 a bushel, trading pretty much right in the middle of the range for the day. And cotton now has turned positive, up 13 points on the December at 72.38. Ted Seifried's with Zaner Ag Hedge. And Ted, what are you watching?
Well, howdy, Tony. It's pre-report day. So basically, we're just kind of positioning in front of the report. I do feel like we are getting a little bit of harvest pressure here today in front of the report as well. But really, we're just all kind of on pins and needles, waiting to see what the USDA has to say tomorrow. Obviously, the big event here is going to be what they do with production, right? What's the national average yields going to be for corn and soybeans, right? And by the way, the trade has got about a 3 bushel range for corn, which is fairly small. And the average trade guess leaves it pretty much unchanged from September, which I find is a pretty big surprise, because I think the market has been actually factoring in something less with the warm and dry finish that we had for corn. I think the ideas in the market have been that we would see something closer to a 182, but the average trade guess is a 183.4. So we'll see. I wonder if it comes out on top of trade guesses, if that would be a negative reaction from the market, because again, I feel like the market's factored in something a little bit lower, but even more so for soybeans. Although the range of guesses for soybean yield is actually kind of wide at 3.3 bushel per acre. From a percentage standpoint, that's much larger than the corn. But the average trade guess at 53.1 is pretty similar, just 1/10 below what the USDA was in September. Which there too, really surprised with the analyst trade guess, because I felt like the market had been trading something lower. By the way, I am the low end of those guesses at 51.7. Sort of reflecting that warmer, drier finish that we had. Still a very good yield for soybeans. And also, look, at the end of the day, you might have some smaller carryover numbers for corn and beans, especially if they cut the yield a little bit. But we're not really looking at numbers that are going to be tremendously bullish for these markets, Tony. Just maybe a little bit better than what we had seen. And I do still feel like there's a lot of harvest pressure to get through. So, this report, if it comes in lower than expected as far as yields and as far as carryover, it could set the stage for some stronger markets later in the year as we get into the late fall, post-harvest, into the winter and spring. But I still think there's enough harvest pressure that unless this is an absolutely shockingly bullish report, I kind of feel like there's still a little bit more downside. And if you look at the charts of corn and beans, they're kind of suggesting the same thing.
Yeah, perfect look at what we could be seeing tomorrow. Also coming tomorrow, we could see cash cattle develop. So let's take a break. We'll come back, talk cattle and hogs. Market Day Report continues after this. Okay, it's Market Day Report. We're trading livestock futures here at mid-morning. Live cattle mostly lower. The exception, the December contract is a dime higher, 187.32. Are we suggesting possibly higher prices for cash? We'll talk with Ted Seifried in just a moment. November feeders down 12 at 248.55, and the hogs continue to move higher through the February contract. December up 67, 76 1/4. Again, Zaner Ag Hedge is where he is. Ted Seifried. Ted, what are you watching?
Yeah, so it's interesting. We've kind of bounced off of some support levels here in the December live cattle today, which is why we're up, just a couple ticks. But to me, you get a chart that sort of looks like it wants to roll over and test the downside after a really nice rally off of the sort of double bottom that we had there from August and September. Whether cash cattle develops higher or not, yeah, I think the market had been talking about that earlier in the week. I think our expectations have faded a little bit on that. And you look at box beef prices and you wonder how long we can see higher cash cattle and how the Packers' appetite is going to be for really bidding aggressively going forward. You did have a really good day in the stock market yesterday. That renews hope in domestic demand. But I'm also going to say that we are kind of getting into a time frame where that sort of slows down, and we've not seen it reflected in box beef prices. So once again, I am sort of cautioning the producer right now that there could be a bit of a downdraft coming. And I think at these prices is a really good time to take a look at some downside protection. Not necessarily sell the farm, but maybe some sort of line in the sand, like owning some puts, something like that. I think is a good play at this point, especially after the very nice bounce that we've had off of those August September lows.
Yeah, Ted, I kind of look at it like flying a kite. You can fly that kite for a long time, but at some point it comes down. Even if you let go of the string, it comes down at some point. So, Ted, thanks for popping in and joining us today. Ted Seifried with Zaner Ag Hedge.
That kite does come down eventually, doesn't it?
It does.